Hey everyone, this is Mark from Stocks and Cash. It is Tuesday, April 3rd, 2018. Here with your market update, going to talk about my holdings and some potential trade setups. I think this will be a relatively quick video as I don't really have a whole lot that I'm holding or that I see that I really want to take trades on going into tomorrow given the price action of today. But let's take a look at what we got and maybe you'll see why I'm saying what I'm saying. So, taking a look at the SPY. We retested this low here of 257.55 that we put in on the 23rd and closed at on the 2nd. You know, more or less, we pulled down below it a little bit, but ultimately we had a, well, almost an inside day candle. You could look at it as a hammer, although hammers usually have smaller bodies than what we have here today. Volume was okay, you know, higher than average. You can see that the Stokes are trying to start to turn up. MACD looks like it may be bottoming out, maybe want to turn up, and RSI is still kind of in this holding pattern here. So to me, the markets are still neutral. I don't think that today's candle gives us any direction, indication that we're going to start moving up necessarily. We still have this downward trend that we need to break through, and we still need to close above the 8 EMA, which has evaded us for quite some time. You know, ever since we closed below it here on the 16th of March, we haven't closed above it. So, you know, we still have some work to do before we can say, oh yeah, we're bullish and we're going to start running up. Now, the other encouraging thing potentially is that this could be a double bottom. We closed here, again, 257.55, closed around there here and around there again here on the 2nd. So this may be the makings of a reversal and a new trend upwards, but again, we'll have to see. And it looks like if it does happen, it'll bring us into this sort of symmetrical triangle that's starting to form here. And those can break out either way. So there really isn't any clear sign of where we're going to go, although short term, clearly there's a gap here that we can fill at 270. Of course, there's our resistance level here at 264, and then we have a gap to fill up here at 281. So, you know, time will tell if we do get up to those levels. I mean, certainly at some point I would expect that we will, but that could be, you know, weeks, months, even years from now, depending on what the overall market does. I don't mean that as a doom and gloom statement, like I'm expecting us to roll over and go bearish, but certainly if we don't hold these levels, the 257.55, and we close below it and close below 253 or so, then yeah, you know, there could be some more bearish action. But again, I'm neutral until we get a break above this trend line or below this support level here. So tomorrow's another day. Let's see what happens, but that's kind of my analysis of the market right now, at least for the SPY. Let's take a look at the Qs. Now the Qs have put in a doji type candle similar to what we saw back here on February 9th. Now it wasn't quite as pronounced. Even the bearish candle the day before the doji wasn't as pronounced, but this could certainly indicate a reversal in the Qs. Obviously, we've been selling off for quite some time. Let me draw the trend line here. So, you know, there's still some work to do on the Qs. If this is the bottom on this leg, you know, we did put in a higher low ever so slightly. So you could look at this as, you know, we're still keeping this ascending channel potentially. But we do need to get through this or above this long-term, well, now it's a resistance line, but this support line, what was a support line, we need to close back above it. We also need to get a close above this descending trend line and above the 8 EMA. So still on the Qs, there's, you know, some room to go. Again, Stokes are pretty similar. It looks like they're trying to, you know, start moving bullishly. MACD looks like, you know, well, truthfully, it still looks like it's down. It's not really bottoming out yet or curling up, and RSI is kind of in this little pattern here, not doing much of anything either. So, again, similar to the SPY, there is some work to do still on the Qs. So, again, I'm not expecting one direction or another necessarily, but this could be a double bottom potentially. And if so, then, you know, obviously we have a chance to bounce and start breaking up and out. So it is earnings season. That could add some fuel to the bullish run if it does break out that way. You can see that volume was relatively strong here on the Qs. Actually, it was very strong. well above all of these, most of these levels, going back at least back to August from this time frame that I'm showing here. So I wouldn't be surprised if we do start running up and start making some gains, assuming that earnings is strong the way it was back in December. So just something to keep your eye on. And let's look at the small caps, IWM. They definitely put in an inside day candle. And although the trend is still downward and bearish in the short term, it looks like there is the potential to start reversing, although, similar to the SPY and the Qs, we still need to get above the 8 EMA, all these other exponential moving averages, above the simple moving average, above this descending trend line. The good thing is that they're right here. So if we can get a close, up above, let's say 153 or so, we're currently at 150.25, there's certainly room to run up another $10 or so back up to 160, $8. So, maybe you could look at this as a double bottom as well. This is support. We closed on it on the 2nd, kind of bounced off of it today, and maybe we start running up. But again, until we get past this descending trend line, things are still, you still have to kind of have a bearish perspective. If you want to start buying calls or going long, then you probably want to put your stop at the low of this candle here on the 2nd, at least for IWM. Holdings, American Express also had an inside day candle. I had bought puts here on the 2nd early in the day. They were working really well. I thought American Express would come back down. Kind of funny price action in the middle of the day here. So this is where we opened at the 9:30, closed above, kind of came down, went above this high, so we're making higher highs and higher lows, and then we kind of came back down and actually broke below this level here, not below the open, but we still came below this level, and then from 225 till about 3, so in about a half hour, we moved up about $1.50, which is quite a big move on a stock like American Express, and we had a strong finish as well. So that's looking encouraging, not for my position, but it's looking encouraging for the stock itself. So I'd be looking to get, and we did close above the 8 EMA. I'd be looking to get out above this descending trend line here, probably around, well, maybe the 21 EMA is probably the best spot. So that's 93.86, so maybe another $1 of risk or so to see if this thing gets smacked back down. But if the overall markets rally, you can see that, Stokes are looking bullish, MACD is trying to cross over bullishly, and the RSI, although it's not really doing too much, is pointing up bullishly as well. So again, there's still some work to do. This level is acting as resistance, 92, let's see, what was the low? So 93.20 is looking like a good resistance level here. So maybe, either this level or above this 21 EMA is the spot to get out. Cut my losses. Although I am still up, it's barely. I think I'm up about 5%. So a little disappointing in today's action. I thought we'd at least come back and test the low here. That's where I was looking to get out. We never actually hit it, and so I lost my gains. But that's the way it goes. So I think if the overall markets rally tomorrow, American Express probably will as well. This inside day candle can be a strong indicator of bullish action, but that we still need confirmation to see if that happens. So let's take a look at a couple positions to potentially get into tomorrow. Best Buy closed above the 55 and the 21. We're looking like we're getting support on the 8 EMA based on the last 3 days of price action. We're above the 100. And, if you consider this a descending trend, we still have a ways to go before we even come close to touching this level. Got about $4.50 worth of, sky or so to get to. And it really depends, how fast we get there. We could get there in say 2 days, and you could go up to 75.43. It could take a little bit longer, and you go up 74.63. So between $4 and $5 of gain here, and very low risk. You put your stop at the low of, well, I guess it depends how you want to do it. You could put it at the low of today's candle. You could put it at the low of the candle that was put in on the second if you want to give it some more room. Depends how you want to play it. But the Best Buy is looking very strong, kind of coming out of this downtrend. Oh, you can see it basically put in a double bottom, closed here around 66, 67, closed here also at 66, 67, and then gapped up, and it's been running the last few days, kind of making progression here bullishly. You can also see that the Stokes are indicating a bullish move, and MACD is just barely starting to cross over bullishly. RSI is also turning up, so I really do like Best Buy as a 5-minute rule type candle. Again, for those who haven't seen it, wait till the first 5-minute candle gets put in. If you get a close above that candle, go ahead and make your trade, and you can put your stop at the low of that candle, the first 5-minute candle, if you want to be conservative, or again, you could put it where I described below this candle or this candle. And then another potential option for tomorrow is Hess. It's been kind of moving sideways here these last week or two. The indicators aren't super healthy, but if we get a close above this level here, 51.28, there's potential to come back up to these highs, 55.48. So you're looking at about $4 worth of profit, and your risk will depend on what the candle, what we put in on the candle. Of course, you do want to be careful this gap that still needs to fill. The low of this candle here is 52.2, so we are kind of close to that. Let me go back to the 3-year to see where this resistance line is. So that resistance line that I drew here kind of corresponds with this low, this pivot point that was put in back in 2015. But it doesn't seem like we've really, hit it and stuck with it per se, though there was some banging off of it here back in this time frame. So I'd be more concerned about getting up to this level here at what was the high? 55.48. So we're at 50.45. It's about a $5 gain. Of course, you want to wait and see if we have a close above these levels here that we've put in recently. And if we do, you could, make this your stop level and see if we go up and fill this gap, and then come back and test these highs here back on the 11th of January. So that's all I have for today. If anyone has any questions or comments, please feel free to leave them in the comments section. Otherwise, have a great night and good luck trading tomorrow.